Sooner and faster. Those were the words that spooked the markets yesterday. What happens next? Yesterday morning, markets were soaring out of the gate this morning, up more than 2% most of the day. And in fact, just before the Fed meeting, the NASDAQ actually surged up 3% as the Fed announced that really not much change from their November statement about increasing rates and reducing their balance sheet. The problem came with the press conference when Jerome Powell uttered two words, sooner and faster. At that point, the market absolutely collapsed back into negative territory, rebounded to finish the day about even, but the markets remain concerned with the fact that the Fed is hiking rates and now appears to be wanting to reduce their balance sheet, doing quantitative tightening sooner and faster than they did in 2018. So as we know, back in 2018, the market declined about 20% before the Fed backed off of that quantitative tightening. The question today is, will they do that again? The problem for the Fed here is simply this. The yield curve is starting to decline rather sharply, suggesting that we're going to have economic weakness and disinflation as we get further into this year. Retail inventories are surging. That's another sign of disinflation coming down the pike. What the Fed can't do is get caught at zero interest rates with a $9 trillion balance sheet and a recession hits, because they'll have no ammo really to help bail out the economy at that point, or the markets. So it's really the lesser of two evils. Do they begin hiking rates here knowing that they're going to run into a disinflationary environment and probably disrupt the markets, creating some financial instability, but being able then to offset that financial instability by being able to back off of rate hikes, reduce rates, and begin to expand their balance sheet again? This is going to be a real problem for the Fed as we head further into 2022. But that doesn't mean that stocks are just going to all go down. Look, a lot of the stocks that have been declining recently have certainly been these smaller cap names that have been under a lot of pressure. And if we do get into a disinflationary environment with lower earnings, small caps and mid caps are going to struggle. Companies that will probably hold up better are stocks that can commit to major stock buybacks, which have made up about 40% of the advance in the market since 2011. And of course, the stocks that have been doing very well, like Apple, of course, they've bought back $500 billion worth of stock. But it's not just them. It's all the major large cap companies that can afford to commit billions of dollars into stock buybacks. Like Comcast announced today, good earnings, increasing their dividends, adding $10 billion to their stock buybacks to help support their earnings per share. But let's take a look at a couple of those stocks. A good example that I'm talking about here, a big company that's got great earnings, of course, and able to buy back shares of stock, Microsoft, which reported really great earnings yesterday. This is our money flow indicator that we talk about here on the show at simplevisor.com, and you can get access to this for markets and your stocks at simplevisor.com. But the idea here is that the money flow indicator has turned positive. We're also getting a buy signal on a stochastic basis, and that's actually triggered a buy signal for the stock here, suggesting that we're going to see a little bit more advance out of Microsoft. Again, big quality, large cap company, able to buy back shares, reporting really strong earnings growth. Another company, as I said, is Comcast. While Comcast reported very good earnings today and a $10 billion share buyback, the stock is getting very oversold, but has not triggered either buy signal just yet, suggesting that there may be some more sloppiness in the stock here before we get a buy signal. But this has been a good indicator, suggesting that basically we can wait here a little bit, watch for these big cap companies to actually form a nice bottom. If we take a look at Comcast, it has been trying to form a base here, which is very encouraging. If it can hold on to that and turn up into a buy signal here over the next couple of days, we'll get a good opportunity to add to a company like Comcast in our portfolios. One more thing. Apple, of course, is reporting earnings today as well. Keep a watch on that. Stock has had a nice pullback here to support. Apple's another one of those best of breed companies. Very close to turning a buy signal here on both sides, like Microsoft. So again, in these big cap tech companies, we're starting to see the bottoming process come in. And again, since these are the companies that can add the most to their share buybacks, I would suspect we're going to see these companies hold up better overall. So again, opportunities presenting themselves in the market. Just because the broader market is under pressure doesn't mean we can't find good trading opportunities in markets. And that's what we can use simplevisor.com to help us do better. I'm your host, Lance Roberts, for 3 minutes on Markets and Money. See you back here tomorrow.